Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Monday, August 14th, 2023. Before I jump into all the charts, just as usual, want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Also, share the content if you would with friends and colleagues and check out wickedstocks.com where we offer a full suite of both daily and weekly analytical videos just like the daily Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week in 5 to 10 minute video format that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% swings or more on those underlying stock picks. We also offer a 5-day free trial up front. So you sign up and you've got 5 days, if you don't like what you see, to bow out at no cost to you whatsoever. So on with the charts. Let's take a look at the big picture, work our way into the day itself. The fact that we came off about a month ago, this channel top at 299.81 that allows the market to fall to the channel bottom that is on the daily chart well, I can show you right now. A 210.27. This is the daily chart. We've got the weekly chart represented up here at 299.81, and holding below that long-term channel top does allow the market to give it all back into the low 200s, 210.27, and climbing daily. Actually, over the next couple of weeks, will converge with the 217.65 February high from earlier in the year. And so the fact that about 3 trading days ago, last Wednesday, we closed below this speed line at 251.49 has indicated the 210.27 channel bottom. Over the next 2 to 3 weeks is the realistic, I think, time horizon. And over that time, once again, it converges with 217.65. So you might say that 217.65 is anticipated over the next 2 to 3 weeks, unless we fall quickly and suddenly 210.27 is the sort of fallback. It is the default support that can absorb selling through September, even the rest of the year. And from here, we can rally back to the 299.81 channel top. We could trade inside of this band for months to come. If we were to close above 299.81 at some point over the next few months, that needs to be by a 1% margin. That sets off a secondary buy signal that should, over the following 3 to 5 months, yield the 414.49 all-time high. And it was a settlement about 3-4 months ago above this 18-month channel top that is now well below the market at 176.78 that did suggest a retest of the 414.49 all-time high in the months ahead at some point, at this point in time, into later next year, perhaps, because we could fall back into the low 200s before turning back up again. If we were to close sooner than later, once again, above 299.81, we could still perhaps reach 414.49 by the end of the year. And that is the big picture. But let's switch back to the day itself. 251.49, able to contain weekly buying pressures, below which the market remains on its heels as we move through the rest of August. On the way down today, well, let's just zoom into the day itself, and I'll cover the day pretty well here. I'm going to go here, 243.79. Nothing more than Friday's high is our intraday resistance level. You can see to the far right, and below which 235.23 remains in reach today, where a daily low can be placed. If we settle below 235.23, I do see 223.85. I don't show that anywhere. It is a Fibonacci level on the daily chart that I will begin to show, but 223.85 is right about here on the chart. That would become a 2 to 3 to 5 day target below 235.23, so forth and so on our way down to meeting our objective that is still at 210.27. This kind of sets up the day here actually pretty well. You can see on the big picture, 243.79 holding below Friday's high, 235.23 in reach. That is the gap high that would close the gap. We may bottom out there for the day, and if we settle below it, 210.27, as you can see, probably by the end of next week. So that is, kind of it in a nutshell for the day itself. If we push above 243.79, 251.49 in reach, where we can once again place a weekly high, and below which 210.27 remains a 2 to 3 week target. If you bought the 210 or 215 out of the money puts last week following the settlement below the 251.49 speed line, that is the play in terms of options. And if we were to close back above 251.49, I would suggest liquidating those out of the money puts, because I think the market is then inclined to trade up, although I wouldn't have a clear buy signal unless we were to close above 257.87, this descending 3-week channel top. So 257.87 actually converges with the speed line at 251.49. I think it's Thursday of this week. So this really kind of becomes a narrowing zone of resistance that right now I'm keeping them apart. But as we move into Tuesday, Wednesday, Thursday, I will probably just call this a range of resistance. That'll be like in the 252, 256 handle, 253, 255 handle, so forth and so on into Thursday when they converge entirely. It would be a settlement above 257.87 that would reverse momentum, and then by the end of next week, I would expect 278.59. I will also say, as I've said for the last few days and since last week, that if we merely close back above 251.49, that is a rejection of a 2 to 3 week sell signal down to 210.27. And with that, the market then inclined to continue back up to 299.81, that longer term channel top on the weekly chart. But it would be fairly stair-step. And there is, 3 to 5 day swing trades. For instance, the next aggressive go with 3 to 5 day swing trade to the upside is 257.87, a settlement above that. And, the 3 to 5 day swing traders go long, stay long to 278.59, where we could top out for a week and fall off perhaps for a week. And it would be a settlement above 278.59 that would signal within 1 to 2 weeks at the most that 299.81 long-term resistance area that I can again show here. So that kind of covers the upside, I believe. I'll zoom down here to take a look at what the daily chart looks opened up. I just showed all this in a previous chart, but 243.79, if we push above it, merely expecting 251.49. That is that long-term speed line that's coming across like this that we settled below Wednesday of last week, able to contain weekly buying pressures, and below which expecting the 210s over the next 2 to 3 weeks. Once again, closing above 251.49, which is right about here. Expect 257.95 tomorrow. And that is our upward pivot point through the rest of the week. Now, I think you can act. How should you finesse this? Let me go to this chart here. Closing above 251.49, if you are short the market, whatever that means to you, over the 2 to 3 week time horizon, expecting 210.27, I would suggest liquidating that. Now, if you wanted to also then go long based on the settlement above 251.49, you don't have a strong argument for me. It's just that your patience may be tested for a day or two as the market then tests 257.87. It would be a settlement above this channel top that I think would reverse momentum altogether, and actually within 3 to 5 days, perhaps by the end of next week anyway, 278.59 anticipated, where a weekly high can be placed, as you see here to the far right. I don't think there's really anything else that needs to be said. I ask you to click like, share, subscribe, and check out wickedstocks.com. I will be back tomorrow with Tuesday's Tesla. You have a great day.